out.
All right, Federal Reserve Bank of Atlanta President Dennis Lockhart telling our very own Peter Barnes we are approaching a period where tapering of the Fed's bond purchasing could at least be considered. Peter, in the studio now. Welcome to New York.
Hey, guys, I'm going to come to New York more often. Everybody treats me so nice.
Got some cookies in the green room.
Well, I had cookies in the green room, but I got to land a big guest, and we did get Dennis Lockhart this morning.
Interesting.
The president of the Federal Reserve Bank of Atlanta, and he is really the one person inside the Fed who has not weighed in on the issue of tapering, starting to slow down or cut back on the $85 billion a month in bond purchases the Fed has been doing to help keep the economy stimulated, help keep interest rates low. Well, we asked him this morning, and he said, yeah, I think we're approaching the point at which we could consider that. We've heard that from other Fed officials that maybe as early as June, the meeting in a couple of weeks, they might do that. He's not ready to go there just yet. He said that June would probably be premature for him. And so I asked him, well, what are you waiting for? And he said, well, I'm watching jobs. Take a listen.
Well, the most prominent ones, of course, would be related to employment. So the jobs number and the unemployment rate. Beyond that, I look at a range of other indicators of health of the employment markets and try to draw an overall picture.
So once again, we hear one of these Fed officials saying it depends on the data. You know, we will respond to the data. And he said, quote, meeting to meeting.
But what does, I'm sorry, what does tapering mean, though? We can take it from 85 to 65. We're going to take it from 85 to 50. What does it mean?
You're right. And that's the $64 billion question, or $85 billion question. One Fed Bank president, Jim Bullard, said that perhaps the Fed should actually give us some metrics. That for every 1/10 of a percentage point decline in the unemployment rate, cut back by $15 billion.
See, at least that would give us something, some clarity at least. So that would be interesting.
And as you said, Tracy, in the beginning, Dennis Lockhart also left the door open to possibly increasing purchases. Under two conditions. One, deflation, because the Fed doesn't want to see deflation. And two, an economic shock that might help cause a recession. So he wants to leave that on the table.
But I like that notion of having little markers, because then the market will say, okay, employment fell this, that means they're cutting back this. We get it. It won't be a total shock.
Right. Rules-based policymaking.
But don't count on it. That's way too clarity.
I know.
Way too clear.
My utopian world. Thank you.
Okay, guys.
Good to see
Thank
you.
Peter.